Good afternoon, everyone. Or should I say good morning? We are nearly afternoon. It is 7th of December and it's 11:53 a.m. This is episode 21 of the 51362 EMA strategy. It just shows that you're dedicated to your trading success and want to become a trading master, and I will help you every step of the way. Now, this episode 21 is going to be quite deep and quite involved. First thing we're going to do is we're going to cover position sizing and risk management, how to properly do this in the market. This is key to success in trading. And then I'm going to be going over all the trades that were taken and potential trade setups for this week for Bitcoin, gold, and US 30. Perfect. So, first things first, with Tradingview, I mentioned that I was going to test the integrated broker within Tradingview. So, as you all have known by watching episodes up to hopefully 1 to 20, I've been using CTrader to place my trades. And I noticed that you can, well, FP Markets is actually a broker within TradingView. So as you can see here, if you watch my previous videos, as you can see, this Bitcoin here is FP Markets, gold is FP Markets, US30 is FP Markets, and for example, GBP USD is FP Markets. So this is our broker. It's integrated within TradingView, and you can actually place trades within FP Markets within TradingView. So I thought I've never enabled the broker within TradingView. I've never traded on TradingView before. Like, I know it's possible, and it's just great that FP Markets allows that. So I thought, you know what, I'm going to give this a go because I mark up all my charts and it makes sense to just trade within in the whole platform. Last episode, episode 20, I tried to connect it and it wouldn't work. I got told that the reason why it wasn't working was because when you log in, you need to use the username is your account number. So I'm testing on my demo account. Okay, just a closed environment, my practice lab. Don't want to test on a brand new platform using live money because mistakes are going to be made, right? So I've put in my demo account number and the password. If that doesn't work, I think initially it did not work. So what you want to do is you want to log into your FP Markets portal and you want to go to platforms and you want to scroll down until you see TradingView platform, and then you literally just click download Windows, or if you're on a Mac, you can click on that, and then that will open the link, and I assume it's all connected and it all syncs up, and then you log in with your account number and your password, and then I was able to log in. Once I'm logged in, you can see this button down here. It says open panel. You should see FP Markets, right? And then you've got your positions, orders, history, account summary, notifications log. There's a green little icon there to show that it's connected. And obviously you've got the broker here that's showing that it's all good, we're connected. And then if you click this trade button here, this brings up the trade panel, and it's pretty much similar to CTrader. You got the market execution, you got limit orders, stop orders, and stop limit. And we're going to be diving into all of this and how to properly place the trades. But that's how you connect CTrader to TradingView. And just a note on this as well, you need to have a CTrader account set up first. You can't, I don't believe, enable the MT4 and MT5 to TradingView. So you need your CTrader account set up first. Once you've got your CTrader account, you'll be able to connect your CTrader account to TradingView. And the other thing I noticed, and again, I'm in my demo account on CTrader, I believe you have to have your CTrader platform logged in open for it to work within TradingView, because I logged out of my CTrader and then TradingView logged out of my broker, and then I tried to connect and it wouldn't let me connect. But then when I connected my CTrader logged in on this platform here, and then connected again through TradingView, it actually worked. It logged me in. Okay, so glad we've got that one out of the way. If you've got any problems with that, please reach out to me. So let's dive into position sizing and risk management, because this is very important to your success in trading, and using the correct lot sizes, using the correct risk, how to grow your account properly. Because if you don't get this right, then you will not succeed in trading. Okay, so it's very important to get this right. And this took me a while to grasp and get my head round, but I want to keep it in most simple terms possible. So the professional traders, they risk 1 to 2% of their capital per trade. If you're experienced, I would say you could risk 2%, but that's more of a high risk, I say, because if you lose a trade, you're going in and you're risking another 2%. So you're risking 4%. And if you lose that trade, then you're going in again, and then your 6% of your account is at risk on one day. So I found that professionals and myself have dropped the risk down to 1% per trade, because if we get it wrong, we can go in again and we're only risking another 1%. So I have listed the balances. So with a £500 balanced account, risking 1% of the £500 total account, your stop loss should be around £5 at risk. Now, the lot size is the next thing we're going to do. And if we go to Bitcoin, just as an example, just showing you that, if we was to like place a trade, so we're going to do a long position and we're going to put that here. I want the stop loss just below this institutional candle here. So this is our point of interest here. And then the take profit will be above the previous high there. Okay, so we're anticipating we've got all the three EMAs have crossed over here, right? That's perfect. So I'm anticipating that the market should come down, potentially hit this level or entry, and then reverse. So you've got the long position and you've got the short position. So once you've placed your long position and you said where you want to get in on the trade there, and you've set your stop loss where you want to get out the trade, you can now, because we've connected our broker into TradingView, you can right click and you can go to create limit order. Then this opens the limit order trading panel. As you can see up here, we're on Bitcoin and we're in FP markets. The limit is going to be a buy limit, because we are saying we want the market to come down here. If it hits this level and we're in the trade and we're looking for it to reverse, and then as soon as it hits the previous high there, we want to be taking out the trade, and hopefully that will be a winner. Now, with the example of the £500 balance total account risking 1%, if we go back to here, we want to go to our lot size. So we go right down to the very, very smallest lot size. It's 0.01. The only difficulty I've got at the moment actually is this is calculated by the current account balance. So because I'm in my demo account, there is like £3,500 in there. But it doesn't really matter. So for argument's sake, if we had £500 in there, we could press this plus button until you get the risk at 1%. So in this case, it's 1.14%. That's fine. You could go to this if you wanted to, and it's a 0.05, or you can press the plus again, 0.06. You know, that's probably a little bit better. So we are showing now that we're risking 1.14% of our account. That's what we want. And it's telling us we can use a 0.06 lot size on this trade to risk 1% of the accounts. If so, again, if there's £500 in your account, the £500 will automatically tell you your 1% risk on this trade is roughly going to be £5 at risk. Well, it is going to be £5 at risk. So 1% be £5 at risk. So it's telling you the lot size will be a 0.06 lot size, right? And it's already set your take profit, which is there because that's what you've put here. And it's already set your stop loss, which is there. So if you lose this trade, you're only losing 1% of your account. If you win this trade, the percentage gained will be 2.89%. Can you see that here? This is the percentage gained. This is the percentage loss. 1.14 is here, the stop loss. If you scroll up here, 1.14. So if we lose the trade, we're losing 1.14%. If we win the trade, we're gaining 2.89%. And all you do is you press buy, and then we can click the cross here, and that buy limit is actually set, ready to rock and roll. It also tells you down here the money that will be lost. So if you've got a £500 account, that should say £5, right? And then as the winner, it should be around £10, £10 or £15, something like that. £15. You can work it out. It will tell you what you're gonna earn anyways. It's all calculated automatically. So that is how you place a trade through TradingView. Then this is actually placed in CTrader. Let me go to, let me show you my CTrader actually. Let's bring this down here. Okay, so that exact trade that I've placed is now showing in CTrader. So this is what it looks like. We've placed the 0.06% buy limit there. We've got a stop loss set there. And then we've got our take profit set there. So it's all perfect. It's all ready to rock and roll. So that is how you set a buy limit and using risk management. Just quickly, because I know the market is live. I'm not saying it definitely worked out, but we can see what happened to price right now. Okay, yeah, so look at this. What I just showed you, so with FP markets, the crypto market actually closes at the weekend, but crypto is 24/7, 7 days a week, right? So the market is still opening now. So from that exact same trade that we done, this is currently what it looks like. So the stop loss was like this, and then the take profit was like this. So from here, the market stops there, but currently what's happened is, see how this is wicked him. I mean, I didn't even look at this beforehand. This is just how we trade. So this wicked in, it's hit the body of this candle here. You see it's wicked it perfectly, and then it's rejected. It's carried on going down. It's gone more into the trade, but can you see it hasn't hit a stop loss? Nearly did, but it didn't quite. And now it's hit the 62 EMA. It can't break the 62 EMA. And now it's starting to reverse. So it's kind of very near. It's at our entry point now. So it's looking like it is actually gonna reverse. So that is all good. So going back to the risk management, so the lot size will be around, you could put down 0.02, for example. And then you just do the same thing. So when your account is a grand, again, once you place your once you place your trade, let's just go to the, once you place your trade and you've got £1,000 in your account, you just do the same thing again, and it will tell you, right, with £1,000 you can use a 0.01 lot size, right? And you're still risking 1% of your account. So as your account grows, your lot size increases. £2,000 might be a 0.20 lot size, and so on and so forth, right? But the other important thing to know is every market is different. So with Bitcoin, we've just worked out what our lot size is going to be for £500, £1,000, etc., etc., risking 1% of our account. But if we did the same thing with gold, so if we go over to gold now, XAU USD, if we go to gold and we say, if price comes to this area here, I want to short the market here. I want my stop loss to be, just for argument's sake, there. And then I want to have a take profit here. And then we right click, create limit order. So now, as you can see, we are red. So we were looking for a sell. And then if we come here and then again, we want to risk 1% of our account. So we increase this till it gets to 1%. Bang, that's bang on 1%. It's saying that we can use a lot size of 0.07 to risk 1% of our account. Now again, this is a big lot. This is a big account size because I'm on a demo account, but it's a different lot size. It's 0.07 here, but on the Bitcoin it was like 0.06 or 0.05, right? So the lot size are going to be different for different markets. Okay, so you have to keep that in mind. And again, if we go to US 30, okay, and I will go over this trade. This is a beautiful trade caught yesterday. But again, if we come here and then we're there and we want to have a take profit, say here, if we come here, create limit order, we're in US 30 now. And if we start at the bottom and we want to get this to 1%, just move this up. I mean, if quicker, if you want to click 1, 5, you can do that here, but it's just getting comfortable with that really. So if we just keep increasing this till we get to 1%, okay, so a 1% account risk, it's saying we can use a 1.02 lot size for the current account balance that I've got, right? So the lot sizes are different for every single market, and it's different for the account balance. Now, if you increase the risk, if we go over here, if we want to risk 2% of, say, £1,000 account, it should roughly be about £20. Well, it is £20 that it should be risking. So for this example, if we've got £1,000 account, we should be risking 2%. So this can be increased. Just keep going until it gets to 2%. So a 2% account risk at £1,000, it's saying we can use a 2.04 lot size. And that's it. So you press sell. That places the trade ready. And as you can see here, it's telling you exactly what it is. It's a sell limit. This is the red line here. If it hits our stop loss, we're going to lose £77 from our account. And if we win this trade, we're going to win £271. Another thing on this, which I was a bit confused about, unfortunately, these numbers here, 2.04, 2.04, 2.04, that is that is the lot size it's telling you. Okay, yeah, so that's the lot size, 2.04, 2.04, 2.04. But what you can do is you can right click, you can go settings, you can go to trading, and you can change this from money to percent. What's going on there? Let me go back. Profit and loss is percent. Don't think that's changing. Okay, that's changing there. Okay, yeah, this is what I wanted to show you. So the brackets profit and loss, it's saying there it's 0.11% if it hits our stop loss. But we've put in that it's 1% risk of the account. So it's a bit confusing. It is still 1% that we're risking on this trade, but Tradingview calculates a different formula. It calculates three different things to get to this 0.11% for some reason, and it does the same thing for the take profit. So we should be given the option to change that, but at the moment it doesn't do that. So don't just ignore this. It is still 1% you're risking of the account, and the percentage gain, whatever you've placed in your trade, is going to be that whatever it was. So just ignore this and just ignore this. For some reason, TradingView calculates it slightly different, right? So I hope that kind of makes sense with regards to risk management and how crucial it is and how important it is to use the correct lot size for the market that you're trading. Because if you've got proper risk management for gold and used the wrong lot size for US 30, all the good that you've gained from your account trading gold could be wiped out by one trade on US 30 and vice versa. So this is why it's important that you use the same percentage risk and the lot size it's telling you to use per the market that you're trading, and then that's how you're seeing your account grow steadily correctly for all the markets that you're trading. And I would say I would risk 1% at the start. I wouldn't worry about the 2% risk, but if you want to do that you can, but I would say to stick with the 1%. And as you can see, the smaller your starting balance is, the longer it is going to take for you to grow your account, because you're only risking £5 to make £10 or £15. So really, you need a higher starting account to make bigger returns faster. And some of the professionals that I've watched and the books that I've read, they recommend this is the best starting balance, is actually 5 grand. Now, as a start, I would suggest probably to start on this and this just to get used to things. Obviously, you want to trade on demo first to get used to things, but maybe at the start, just trade with £500 to £1,000 just to get used to the emotions and things like that. But I would, in the background, still be saving and then try and start with this 5 grand, because you can then risk £50 on a trade to potentially make 150 pounds per trade, right? So this is just a little introduction to risk management and position sizing. I have got used to it now and highly recommend connecting your broker, hopefully it's FP Markets, to TradingView, and also hit me up with regards to the affiliate link that I've got. We really appreciate it if you do that, because it all just helps the group, right? And just how we're gonna grow things. And yeah, just really appreciate if you was to do that. If you want to cancel the order, just click this cross here That cancels it. That cancels it. Go back to Bitcoin. We don't need this. And yeah, let's dive into some of the trades that were caught this week. It's been a really, really good week. Very happy with the trades that were caught, and I will go through them all now. So just bear with me whilst I get this all cleaned. Okay, so starting with Bitcoin on the Monday. Bitcoin, we had the 5 and the 13 EMA crossover. The market is pulled down. We've then got a pullback, and where did this reverse from? It didn't quite hit this candle here or this candle here. So this potentially was a missed trade. However, if you did see that the market started to reject from this area, you could go in for a short, and then the short position would be here, and then the target would be this low here. So it's a bit of a tricky trade to catch this one. Nevertheless, it did work out. Next trade was on the Tuesday. So prices broke down. We've come back up to the 62 EMA. It's actually hit this institutional candle here. So let's get this down here. So it's hit this institutional candle here. It can't break through the 62 EMA. So we short here. TP can be there. Sorry, the stop loss is there. And then I would say the take profit is there. I always aim for the previous low or the previous high. That's where I'm getting the most success with my exits. So where am I here? So that would be my take profit there. So pretty much one-to-one trade, and that slammed through. So that was perfect. So that was a winner. Next trade, we have the 5 and the 13 EMA crossover. We've then crossed the 62 EMA. So then we're anticipating a pullback to the last down candle before this up move, the institutional candle, which is here. And then play it safe, stop loss can be there. And then if we go for a long position here, so take profit. Oh, sorry, the stop loss is there. And then I would have the take profit on this previous high there as my exit. So that's where the take profit would be. So prices slammed down, see this wick here. So the buy limit would have got activated. Prices started to reverse, and then it's hit our take profit, we're out the trade, and then it actually reversed. And that's why it's good to have your exits, and that's why I target previous highs and previous lows, because I'm out the trade now. If I wasn't out the trade and I was aiming for higher, then it would have either got me break even, or if I didn't have put a stop loss to break even, it would have been a loss. Okay, so another great trade on the Wednesday. And then this trade here, we had all the EMAs cross over again. Could have actually, I think I might have caught this trade. So we've got this institutional candle down here. As you can see, price has decided that it wants to come back down to this area, because you do see that sometimes. So this trade here was a winner. That's all good. But then what happens again is the market doesn't like to see people win. So what it does is everyone's going in for buyers, buyers, buy. This is going to take off. It's going to the moon, whatever. It's going to 100K. And then it says, no, you're not. And then it pulls down again. It comes for another pullback. And then what happens is these get wiped out. These get wiped out. These guys down here got wiped out. Where's my little cross? So literally everyone that's in buys here, break even, buy, 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 buy. This pullback is just taking all these out. These are all out. And it's come down to this area here. It's still our point of interest. So you could go in for a buy there. And you could have your stop loss to play it safe here. And then TP1 is there. So it's a 1.5 trade. And then if you really wanted to hold it, this did eventually go to 100K. So if you twin trade that, you could have caught that. Did it reach the 13 EMA on its way up? It didn't reach the 13 EMA. Did not get the 13 EMA come off. However, if you do have the 5 EMA as an alert and you wanted to get in on there, the alerts would have gone off here. So you could have gone in for a buy. And actually, I think it did come down to this very small institutional candle here. Can you see how it's wicked down here? And then, yeah, it's just taken off like a rocket. So, few opportunities to get in for the buy on the Bitcoin to catch that trade to 100K. And then, as you know already, I will be showing the proper checklist. But if you've been watching all the videos, one of the trade criteria is we sell high, we buy low. So this is why we're buying here. We're buying low, and then we sell high. So we're looking for sells now on the high. And the reason why you buy low and sell high is once you've reached a high point, the market's got to pull back. There's imbalance to be filled. So for example, there's imbalance that's been left here. And there's targets. You've got the 62 EMA as a target to have your take profit. You've got the institutional candles again down here. And then you've got the institutional candles down here that need to be mitigated out. So there's targets, always got to have targets, and the 5 and the 13 EMA is crossed over, and this is looking like it's a falling market. I actually sold this when it was falling, and I had my take profit at the 62 EMA. So I think I sold around here and I got out around here, so that was a great trade. And then on the Friday, this was a good trade that was caught again to finish off the week. So yeah, we've come down. This is you can see how this is like wicked right down here. Where did this actually go to? So it's actually, yeah, it's come right down to this institutional candle here. So this is a potential reversal area down here, and it's slammed right down. It's literally taken out all these guys here that are in buys and stuff. It's wicked down, and it's completely reversed from here. So that would have been a great buy to catch from there. But I actually got in on this institutional candle here. So I got in here. So I see that price has come up. It's a bit riskier because we haven't had the 5 and the 13 EMA crossover. But when I see these rejection candles here happening, and then I see the market start to pull away, I've gone in for some buys. And then the market has started to go in my favor. There is targets. We've got imbalance as a target there, which I believe I had my imbalance there. And I just want to show you so this was that exact Bitcoin trade there. Again, this is on my demo account. As you can see, 1,830 pips was banked. It shows the lot size that I was using, and it tells you where I've got in actually. So you can see that 97938. So if we come back to here, if I put in 97938, so we actually got in, well, I got in where that orange line was, where that orange line is there. Okay, you see that? So the reason why I've got in, I mentioned we're getting these rejection candles from this institutional candle here, and I'm thinking, yeah, this is going to take off. So then I've gone in for a buy, and then I've got my take profit, I believe, was there. Probably was a bit lower actually. Let's just see where. So I got out at 99769. 99769. 99769. Okay, so actually got out there. Could have held it for longer, but I just decided just to get out of there. I think it was actually the previous high there that I got out. But yeah, there was imbalance further ahead, but it's Friday. I wanted to get out, and yeah, that was all good. So that was Bitcoin. Multiple opportunities to get in. Hopefully, this is starting to get some breakthroughs now of how I trade and how you should start trading. Moving now on to gold. And gold has been okay throughout the week. Middle of the week, price was consolidating, but nevertheless, we did manage to catch a few trades. So gold is here. Where was we? Yeah, I think Monday wasn't that good. Tuesday, I noticed it was consolidating. Nothing was really happening. And then I did notice that because of the consolidation, I was waiting for a liquidity sweep, and that's what we got here. We got this. You can see this candle was wicked down there. So a bit of a high risk trade, but if you bought here, because all these guys got taken out, and then take profit would be there. So if we bought on this liquidity grab, and then take profit was here, that would have been a nice trade to catch, and I think I did catch that one. So there is liquidity sweep trades, and I will be posting this one into the group because that was a good one for the swipe file. So that one was a great trade. And then we had this market sell off. Did I catch this one on the sell? So all three EMAs have crossed over here. So you would have had the alert go off. It's up to you if you wanted to sell straight away. sometimes you get the pullback back up to this area. It didn't actually quite happen, and we never got the price come up to the 13 EMA. So there was no sells that could have been caught here, unless you obviously on the 5 EMA. But I did take the buy on Friday for gold. So we've got this last down candle before this up move. I did have a buy limit set. So I was anticipating for price to at least get to like here. We did wick down, so did get into the trade, was in a nice bit of profit. It couldn't break the 62 EMA, didn't quite reach our targets, was break even, and in the end I just closed the trade. But nevertheless, still banked some pips. So that was gold for the week. Moving now on to US 30. There's some good opportunities for US 30. So yeah, just looking at Monday, this was, I mean, this was a bit of a, I think there was like news, because this is just like taking everyone out both sides. So bit of a high risk trade, but can you see how these got all taken out? This is wicked up, and then it's instantly started dropping. So you can take these liquidity sweep trades, stop loss maybe like there, and then take profit, I would say this low here, which is there, and that did slam through, so that would have been a good trade to catch. Next one, again, we did have a liquidity sweep here. This has just taken everyone out and then started dropping, so you could have sold there, and again had to take profit as there. So that one, that would have been a good trade to take. So 2 liquidity sweep trades to take. They're more high risk because this could just keep going up. So you need to determine like how big your stop loss is going to be, use your 1% risk and all that good stuff. Know when you're where you're gonna get out with your exit. But nevertheless, that was a good trade. And then on the Wednesday, we had the 5 and the 13 EMA cross over. We've crossed the 62 EMA, and then I was anticipating the pullback to this area here. It is a small institutional candle, so I think I did get stopped out. Can you see how this went a little bit further? So I think that was a stop out. However, I did notice that it was rejecting from this area, and it was rejecting off the 62 EMA. So do believe I did go in for a buy again, and then take profit was above this previous high there. So take profit was smacked. So that was a great trade. I'm very happy with that one. And then yeah, we just had a massive sell-off on the Thursday, probably due to news. Prices started dropping down, then markets actually come back up. It's hit this very last institutional candle here. It very nearly hit the stop loss, or it might have done. So ooh, what's going on here? So this one here, and then TP, I'd say there's 62 EMA, and then that just kept on dropping down like anything. So that would have been a great trade. I didn't catch that one. One of the criteria actually is to get in on the 13 EMA, and actually looking at this, this was actually a winner. So I say to all my students is whenever the market or price hits your area, you should just get in on the trade regardless. So you've got two options. You can get in the trade straight away as soon as it hits your area, or you can play it more safer and you could look for a reversal. Now, the problem with waiting for reversals, and if the market is actually reversing before getting in, is you have to be more into the charts. So if you're working, if you're out and about, you can't be forever looking at the charts to see if the market is gonna reverse and then get in. So the way I like to do it is just to get in, accept my 1% risk, and if it plays out, it plays out. If it doesn't, I've lost 1% of my account, right? And this was a great example. So price has been falling for a while. Then we get in a very small pullback. The 13 EMA alert has gone off. So you sell straight away, which was this one here. Bang. Stop loss just a little bit higher there, just to give some room. And then take profit is the previous low, which is here as the exit. So we want to exit there. So that trade alone is like a 1 to 3, nearly a 1 to 4 trade. And as you can see, so prices come up, we've sold, it's starting to move down, and then not sure if I got a stop loss actually, because this is hard to tell because we either got taken out there or it slammed down first and then reversed. I like to think it slammed down first and then it's gone higher because it's blue. So I think this was a winner. So price is slammed down, it's taken out this, and then it's reversed. So that would have been a winning trade. But this was the one of the nice, beautiful trades of the week, which I caught. So price has come up. The 62 EMA alert has gone off. So I've gone in for a sell straight away, which is bang. TP stop loss, sorry, was quite high-ish. Didn't get stopped out, and then the target or the exit is around there. Could have held it for longer. So this is going to be the take profit is there. So that was a winning trade to finish off the week. And just to show you that I do take all these trades, this was the sell here. You can see sold bang as soon as I got the 62 EMA. This is after, so I put my stop loss to break even. Let me see if the okay, yeah, so this is where I put my stop loss. Very nearly hit the stop loss. So sold there, stop loss was there, take profit was where I showed you, and then as you can see, unfortunately it's showing these down here, but take profit was slammed. You can see that it's taken me out the trade because you can see there down here it says TP. That's where my TP was. So that was a beautiful trade, and that's this trade here. So 1,491 pips. It was 2 hours 39-minute trade, and yeah, this is where I sold, and then this is where you bought back your position down there. So overall, very happy with all these markets, Bitcoin, gold, and US 30. We've covered position sizing and risk management. We've also covered how to connect the FP Markets broker to Tradingview and how to place trades through the Tradingview. And yeah, it's been a great week. Very, very happy. Let's just finish up now with what's going on next week in the markets. So what we got Monday, nothing really going on. Tuesday, nothing really going on. Wednesday, we've got some red folder news, quite a lot actually for the US dollar. So that'll be quite busy on Wednesday. Thursday, yeah, we've got some red folder news for the US dollar and there's euro there. And then Friday is nothing at all. So yeah, that's it. That's the end of episode 21. Appreciate your time. Appreciate any feedback, any questions you've got. Just message me in the public chat or the private chat. Get used to things. I'm still creating the full course from start to finish, and anything else that I can think of that's going to help improve on your journey, I'm gonna put it into the course and the VIP group. Appreciate you, and yeah, let's have another killer week next week. Take care, and I'll see you in the next one. Bye.